Okay, welcome, ladies and gentlemen, to today's live stream. This is going to be quite a big video, quite a detailed video. It won't be overly controversial either, like some of my other videos, so it should be quite shareable. You can like and do the other stuff, share it with other people. But we're going to talk about these tariffs then. I'm getting a lot of questions about the tariffs, how this trade war is going to affect not just the US, but a lot of my subscribers are in Canada. I have subscribers all over the world. So a lot of people are asking me the same question, and they're saying, Neil, I'm looking online and I'm asking the question, how will the tariffs affect me personally or our country? And it all just seems to be rhetoric or propaganda. And you're correct, actually. I went online and did a couple of searches here, like here. What will the impact of US tariffs be? And all that I'm getting across news outlets and YouTube is not an economist alive would defend Trump's tariffs. Okay, well, I'm sort of a lounge economist, shall we call me, and I would say that's not actually accurate. And we'll go through a lot of this, and I'm going to just give you facts. I'm going to give you the data on it. I'm not going to go into anything. It's not going to be my own sort of biases around this. I'm going to just show you all the facts. Now, I started going through all the news outlets, and again, they're all the same things. Storm clouds gather over the US economy. They're saying that the US economy is going to have this big problem. All of your goods are going to be more expensive. China's now saying it's ready for a war with America. Yeah, I mean, I couldn't believe that myself. They're increasing their defense spending to 7.2%, it says. Trudeau made some pretty strong comments towards President Trump as well. He said that he's going to do these retaliatory tariffs. Well, we'll see what's going to happen there. Even Wall Street said that these could wreck the economy. We have Ontario. I thought this was quite a strange one. It's all over social media. All these stores removing alcohol and US products from the shelves. Well, that doesn't actually do anything for the pricing. It might make people feel better, but it's not actually going to make any difference, but okay. And then I went to the BBC World News as well, because a lot of people said they get their information here. Well, this is also biased. I just want you to listen to this clip.
3 days, I heard it from Putin. In 3 days. This is something
Maybe
new.
less.
In 2 weeks, of course, yes.
It's going to be a very hard thing to do business like this.
Very hard to do business, he means, if President Zelensky will not do exactly what Donald Trump tells him to. So he yanked away American military support to force Mr. Zelensky to agree to America's terms, no matter how favourable they may seem towards Russia.
So, even the BBC's been very biased with a lot of their reporting on all of this. By the way, you can subscribe to the channel if you're not already subscribed. What normally happens when I start a video, you get some interesting comments and likes or dislikes, by the way. And you can also join my newsletter where we'll go over this in more detail. Now, I'm going to spend the rest of the time just talking here. We won't go back to the shared screen. And I've made about 10 pages of notes here that we are going to go over. So there's going to be a lot of ground to cover. But now that I've given you the sort of intro and led you into this, now we can go over all the numbers, because I know I get the comments all the time. Neil, we want the data from you. You're so good at doing the breakdowns, the financial, the economics, and how it affects the geopolitical sphere. So yes, I'm doing that because I saw so many people left these comments. Will you break this down? So here we go. Let's get into it. So Trump has imposed significant tariffs now on imports from Canada, Mexico, and China. I know a lot of UK people are saying that want to know about that. We're sort of in a lull period for the UK. The last update was about 5 days ago. We haven't had an update since, so we're going to just wait and I'll update you on that later. But these are a 25% tariff on Canada and on Mexico, 10% tariff on Canadian energy, and an increase in tariffs on Chinese goods from 10% to 20%. Now, all of these countries are in meltdown. They are very angry at the moment and saying these are unfair. So again, without any emotion here, I'll give the numbers to you yourself, and you can say whether you think it's fair or not. Please drop a comment as we're going through. Again, you can agree with me, don't agree with me, but please drop a comment so I can read your thoughts on this. So this is what the media is saying, and we'll just go through this first. The media is saying that this is going to affect the United States the worst. The US are going to be the most impacted by this. Firstly, this is absolutely incorrect. The US will be least impacted, and I'll break that down in a minute. They say that American consumers are expected to face higher prices on all goods. Again, not correct. It won't be on all goods. They say it includes automobiles, electronics, fresh produce, and gasoline. Retailers such as Target and Walmart have warned of imminent price increases, which will be dramatic for small businesses. Again, yes and no. I kind of on the fence with that one. Canada and Mexico, both economies heavily reliant on trade with the US, are likely to experience slower growth and possible recessions. Again, I think that is an understatement of the century, but they're saying that this is unfair on Canada and Trump is being unfair on Canada, and this is where they get into a lot of lies here. It says that Canada has done nothing to merit these tariffs, and Canada has only been a friend to the US. Again, I would agree with that to some extent. Canada has been a friend to the US. They're very strong allies. But it's not true that Canada haven't put tariffs and strong tariffs on US products. And I want to break those down here. So these were the ones, and this was very difficult to get this information, by the way. Very difficult indeed, and I had to spend about 2 hours just on this segment here. So these are the tariffs prior to this trade war. Okay, prior. Butter was 298% tariff. Peanut butter, 295% tariff. Again, this is what Canada put on US goods prior to this trade war. Milk, 270%. Sugar, 265%. Cheese, 245%. Poultry, 238%, and that breaks down, I think it's about 265% of that is chicken, and it breaks down lower with different poultry. Eggs is 163%, barley 160%, rice 150%, vegetables 100%, tobacco over 100%, fish 100%, wheat 94%. I mean, I could go on. This list just goes on and on and on and on. So that is the truth around it, ladies and gentlemen. I don't know why the media is trying to say that Canada didn't have any tariffs on the US, and this is really unfair. Again, I'm not getting into the fairness of it because I don't want to get into the emotional aspect of it. I'm really just showing you that you are being misled by the media when they say that Canada didn't have any tariffs on the US and that the US just wasn't happy with the trade imbalance. It's not true. Quickly on China then, the increased tariff on Chinese goods, particularly electronics, may lead to higher prices for American consumers and potential disruptions in the global supply chain. Yes and no. I mean, we'll get into the inflation aspect after because some of these are crazy, these people, these economists. I don't know where they studied economics, but it makes no rational sense. Some of them are talking up to 12, 13% inflation. Firstly, I'm going to cover inflation last here because it's a little more complex. So it's for those of you who want the complexity, we'll cover that last. But in a nutshell, no, this is not going to lead to rampant inflation because it's all around the goods and services, which will stay fairly similar. And they don't understand that it's monetary supply increase that causes inflation. But we'll link all this later on. So the US had already done tariffs on Canada as well. So I've got to balance this out. And this was before all of this. But it was very small. It was dairy products. Softwood lumber was another one. And again, that was because there was an issue. If you look into the story behind that, there was an issue with softwood lumber. Poultry and eggs, sugar and sugar-containing products. So they were the products that the US already had tariffs on Canada. So when Trudeau said, we already had all these tariffs, and the tariffs were so strict before, not really, you sort of had 4 groups. So again, that's he's sort of crying wolf there. Mexico had a pretty free trade agreement, I would say, because there weren't really any tariffs. So the US hadn't put tariffs on Mexico. There were a couple that I found through the archives. One was tuna, one was sugar or sugar-heavy products, but that was all I could find. When it came to steel products, though, Mexico put a 25% tariff on US steel products. These were their imports. 20% on pork imports. Cheeses were 20 to 25%. Cheeses, 20 to 25%, depend on the type of cheese. Ag products or agricultural products, apples and potatoes, 20% tariff. Bourbon was a 25% tariff as well. So what you had here then, let's just look at this. Mexico had very heavy tariffs on the US. The US had tiny tariffs on Mexico. So it was a fairly free trade agreement, but it was in Mexico's favor. So they are upset at the moment, Mexico, as you can imagine. But we're not going to get their response until this it's the 9th of March. So I believe that's this Sunday, where she's going to respond in kind with tariffs. But I think it's good to delay that decision so that, when it comes to the trade wars, you always want to be very strategic. You want to be patient. You want to think these things through very laterally, very logically. You also want to look into, behind closed doors, of course, alliances with other people that are being targeted with the tariffs. It doesn't seem as though these leaders are doing that. They're sort of operating very independently, which I think would be to their downfall, their weakness. Let's look at China then. So prior to the escalation of trade tensions in 2018, the average tariff on US goods was around 8%. On average, okay. But why? You've got to be very clear and understand why. This was because of the commitments that they had to make to the WTO, the World Trade Organization. They didn't have a choice. The WTA put these on them. So they had to put these tariffs on a number of goods, including the US. Okay, so got to clarify that point. Very important. Here's some key examples then of China's tariff on US goods before 2018, because you remember 2018 was that key year where it really ramped up between the US and Canada. Number one was automobiles. The US automobiles were subject to a 25% tariff. Why? Because they wanted to boost the Chinese industry on automobiles. Number two was agricultural products. Dairy and poultry, these are around 10% to 20%, and 20% on poultry. Technology, electronics, 5 to 15%. Alcohol was 14 to 30%, and textiles and apparel was 10 to 25%. So again, these were part of its obligation with the WTO. Now, if we look at the post-2018 then, the US imposed tariffs on Chinese goods, and this made China retaliate. So they put 25% tariffs on $34 billion of US goods. If you remember this caused havoc for farmers like soybeans, there was also seafood, automobiles, but it balanced out, and we'll talk about how this balances out shortly. So let's just look at this then. I've broken all of this down. Who actually suffers the most? Is it the US, like the media is saying? And the answer categorically is absolutely not. No way. I've ran every kind of model you can imagine across all of this. Every time I ran it, it's the same results. They varied between Canada and Mexico, having the worst outcome. But I'm going to go with Canada having the highest impact. So let me give you my bullets then. The US is Canada's largest trading partner, with around 75% of its exports going to the US. Canada relies heavily on US markets for oil, auto parts, lumber, and agricultural products. Tariffs on Canadian steel, aluminium or aluminum, and dairy will hit industries that already operate on very thin profit margins. So Canada can look to the European Union, which I think they're going to do that. I'm pretty sure when Trudeau flew over for these meetings, this was discussed. There was nothing mentioned about it, but I'm pretty sure he's not stupid. He would have discussed this with them. He can also look to Asia for alternatives as well. So they are options. Most at risk then, manufacturing, agriculture, and energy. So if you're in any of these three, or you're an investor in any of these three, be very, very careful, because these are going to be hit in the short term before they find larger markets. And even when they do, it may not be as profitable. Think about it. If it was as profitable, they would have already done it by now. So I'm going to say Canada is going to have the biggest impact. Number 2, though, is Mexico. And the US is Mexico's largest trading partner. Let's look at it in that way. Over 80% of its exports go to the United States. Over 80%. So it's going to be significant. Mexican industries heavily depend on US demand, particularly in automobiles, electronics, and agriculture. So again, we're seeing similar things here. And then when you look at the plans that President Trump has for domestic production, it kind of all makes sense where this is going. The auto industry is highly integrated between both countries, meaning new tariffs will disrupt supply chains, jobs, and investment. Higher tariffs on Mexican produce, these will be things like your avocados, tomatoes, beer, things like that, will hurt farmers and raise prices for US consumers. Again, this will be temporary. Mexico could try to diversify their trade with China and South America, but the US is still critical for its economy. So I think most at-risk industries here, very similar. It's going to be the auto industry, it's going to be agriculture, and it's going to be electronics. So we're dropping the manufacturing aspect. So again, if you're an investor, be very careful of these things. China then, moderate to high impact. And by the way, if you haven't subscribed, please subscribe to the channel at this point. China then, there's going to be a moderate impact. It could sort of bridge into the higher impact level, but I'm going to say medium to moderate. And the reason why is because China is less dependent on exporting to the US. It fluctuates, but it's somewhere around 17% of China's exports go to the US. And they're opening up wider markets. I actually did a very detailed video on this in yesterday. I know you don't get it on YouTube, but it goes into the private community if you want to watch that video. It was an hour and 17 minutes long, so it's not for the faint-hearted, but it goes into all of this in very specific detail around investments and how different investment classes are going to be impacted by a lot of this. So you can watch that if you are interested. But this is the thing, it's going to be less impacted. China is. They can look at alternative markets. Europe, which surprisingly, there's a lot of talks going on between the EU and China at the moment, and it's because they are angry with Trump over all the Zelensky stuff. And they've obviously taken a side already. So Europe has taken the side not of the US and Trump, but they've taken the side of Zelensky. Okay, so that's where this is looking. So they're looking at other markets. The EU is talking to all sorts of people at the moment, which we'll see how that plays out. But they can look at other markets. They can look at Southeast Asia. They can look at Africa. Again, much smaller GDP across these places. Southern Southeast Asia, Africa, the GDP per capita is extremely low. So is it going to make up for the huge income and spending power of the US? No, it's not. But they can diversify, and the impact will be smaller. However, though, US tariffs on Chinese electronics, machinery, and consumer goods will hurt its manufacturing sector. That I'm fairly confident about. China may retaliate by restricting rare earth mineral exports to the US, which are crucial for tech industries. That would be a very interesting one if that happened, because the US considers these rare earth minerals to be, I'm not sure the correct classification, but in layman's terms, they consider it really important for their defense industry, weapons manufacturing, and other things. So that could be a very controversial or diplomatic point there. So most at-risk sectors in China for you then, that's high-tech manufacturing, machinery, and consumer electronics. Just be aware then. So the US, is this going to be a high impact? Not really. I think we're going to see an initial high impact where you're going to see certain prices increase, but then you're going to see other prices decrease. And then the US domestic industry will ramp up. Very similar with what we saw with steel as a result of the trade war with China back in 2018 period. That's what I think we're going to see taking place here. I do think, though, US farmers are going to lose access to some key export markets, Again, it's going to be soybeans all over again. Hopefully, none of my farmer subscribers went back to soybeans under Biden, because it's about to be hit again. Pork as well to China. I mean, the good thing about farming is, depending on the soil, you can actually plant different crops. So just something to bear in mind and prepare for with the season. Consumers will face, I would say, higher prices in some aspects and lower in others. I don't agree that we're going to see this massive amount of inflation across the entire economy. So let me just speak into that a second, and I'll come back to my notes. The reason that you're not going to, in fact, even better, I made some notes here for you. Oh, that's so typical. You know when that happens, you have all your notes and then they just drop out. Okay, I'm gonna have to freestyle this. I had about 5 pages of all the all the complex equations and everything. Oh man, this is gonna test me here. Okay, so will this increase inflation across the entire economy? No. And the reason why is because if you think of your goods and services, let's just use this example here. Oh, I better not make a triangle. I'll get all crazy comments. But let's just make a circle here. Hold on. And we got all your goods and services over here, right? That is your goods and services. Let's say that's 100 units. And then over here, we have 100 units of currency credits. Well, one equals one. When you get the mass rampant inflation, that is something like when 40% of all US dollars were created during the lockdown phase, 2020, 21, into a little bit of 2022 era. That's where the increase was. Oh, actually, let's do it this way. Increase here with all the currency credits. So they went from 100 to 140, but the goods and services stayed the same. So we got this massive amount of inflation. And if you remember those forecasts I made about how it would affect equities and how we'd see even certain assets go up as a direct correlation to the currency, that's why we've seen such rampant high prices over the last few years. I know some of you have done well from these with your investments and things, and others haven't. Others have been left behind because people just bought into the media lies, which they're doing all over again now. So is this going to be massive inflation across the entire economy? I would say no. We might see some short-term inflation, and that's more as a result of supply chain breakdowns and some other things, and a lot of the smaller businesses will need to source materials from other places, which cost a little bit more money. So we're going to see certain things like that, but then it's going to be offset by other measures. You're going to see a lot more money flowing within the US economy. And I think and I could go into so many details. I will mention one controversial point. This is where you get all the dislikes. So please make sure you click like to balance out all the dislikes that are going to come from this comment. So one thing that we're seeing already with currency flow is that, and this came from, there was an ICE raid on this restaurant in California, and they found that all 16 of the staff were what you would say undocumented. I just call them illegals, right? So all of these people, these 16 people, were arrested or whatever ICE does with them. I'm not familiar with the full process, but the restaurant closed down. You then saw all these other restaurants were closed over a few-day period. If you're in California in particular, you probably saw it all over social media and the local news. But what actually was happening with that money, think about it. A lot of that money was being sent to elsewhere. The money was outflowing from the country. So what we're going to be seeing is a lot more, and I gave an example on yesterday's video of this man who said, thank you so much. I've been looking for a job for 2 years. I walked up to a construction site and I was hired on the spot. I've been to 30 construction sites. They never had a job for me. I was hired on the spot. So again, what we're seeing is a lot more of that money will continue to flow within the US economy. So you're going to see all these off balances. Some things will cause inflation. Other things will drop inflation. So there's going to be, you can't really look at this and say, yes, this XYZ here is going to cause massive inflation, because it may not. If you go back even if we go back to say the 1800s, let's go right back. It was almost 100%. It was about 97.5%, something like that, of all of the income that came into the US was as a result of what we can call tariffs here. That was a lot of the income. It was coming in via these sort of tariffs. And then over time, we've seen a lot of income coming in via tariffs. We've seen it being weakened under different administrations. So I think this is going to balance out. You're going to see some short-term pain, but I think longer term, if you're in the US, you're going to see a longer-term gain, because you're going to see industries as a result, well, people aren't going to buy these products over here because they've become too expensive. So as a result, they'll buy less of those products. And then you hit the supply and demand curve ratio, which, remember, I've talked about this a lot of times before. So as you hit that ratio, the products will and of themselves have to drop to meet the price demand. And then you'll see other things where that money was being spent on the higher prices. You'll see that there'll be less demand on some other products, more luxury products, or things that aren't something that you need on a day-to-day basis. Those things will also drop very slightly. So it's all going to balance out is what, wow, this is going to be a very long video. Thanks for pressing the likes, because I saw a lot of dislikes come in on that one. People don't like it when I say rational things, or if I don't use the word undocumented, whatever, that it was like 6 words they've added to it now. They don't like it when I use, real words around this sort of stuff. So, oh boy, let's see. Should we go back into my notes here? I think I've covered a lot of this. Another thing, though, is that I think that these trade deficits are going to strengthen the US dollar. I really do. And you can hold me to that. We can see, I know a lot of you are currency Forex traders as well, so you can look at this. But I do think it's going to strengthen the dollar over time as well. See if there was anything else I wanted to mention here. Yeah, I mean, there's loads of, a lot of this is just rhetoric and propaganda, and what Canada's threatening, cutting off the electricity, cutting off the energy and the oil and some other things like that. Let me tell you why that's not going to happen, very simply. Canada's energy industry is in massive, massive debt. I haven't got the numbers in front of me, but it's in the billions. They have huge amounts of debt. So they can't just stop sending the energy to the US. It would be very dangerous to do that. I don't think the US would respond too kindly. But all they would do, anyway, even if that happened, all they would do is just ramp up the US production of energy, oil, natural gas, etc. So there's only going to be, in my opinion, one winner. Again, I'm not trying to add any bias here, but there's only going to be one winner to these tariffs long term. Short term, there's going to be pain. You're going to see the stock markets crashing on the day. I don't mean like a stock market crash. Don't go out and sell your portfolio right now, everyone. That's not what I meant. Okay, you're going to see these blips. You're going to see massive uncertainty as we go forward, especially in the markets. And that's why, again, I don't want to get into crypto here too much, but that's why you're seeing the crypto market fluctuating as well. You're seeing so many margin calls at the moment because of this, and crypto is easy to liquidate and things like that. I don't want to go too much into all of this because I'll get too technical and too complicated. But yeah, please make sure you're subscribed to the channel here. And if you want to watch any of my more in-depth videos, you can find it on the private community, as well as investment stuff as well. So thank you so much for being online. Take care. God bless you. God bless your families. I have a video on Friday, which I think you are going to find very interesting. I went to the site of where the LA fires were, documented it all, found some quite interesting and fascinating things when you're on the ground there. So you can see that on Friday. All right. Bye for now. Take care.